sodass wir
So we shall be starting with this report. I'd like to give the floor to Mr. Tremosa. Ladies and gentlemen, Mr. Tremosa would be really pleased, ladies and gentlemen, if those of you who want to stay in this room could actually hear him. So can I ask all of you to, those who've decided to leave, please leave quietly if you don't feel like listening to this debate.
Zur Geschäftsordnung hat sich noch Herr Kollege
Mr. Mamikins, please.
Thank you very much, Chairman. Dear colleagues, I would like to ask for your attention. Today, 40 minutes before this moment, there is a very sad anniversary in Latvia. It's 3 years since the collapse of a supermarket. 54 people were killed. Lots of children remained without parents, and there is a commissioner.
I apologize, sir.
Meine Damen und Herren, wenn Sie, Frau Beres, Herr Tang, wenn Sie so nett sein wollen. Herr Kollege Tang, nehmen Sie Platz, das kostet nichts. Herr Vizepräsident!
Yes, Mr. Vice President, Mr. Sassoli, please take your seat. You're Vice President of this House. Perhaps you could contribute to this debate.
Bitte sehr, Herr Mamikins.
Go ahead.
This was the biggest tragedy in the whole history of Latvia since regaining of independence, and the biggest tragedy in the last 30 years in Eastern Europe. President, I would invite the members of this parliament who are still in this hall. I would like them to hold the minute of silence just to remember the victims of this horrible tragedy.
Ja, Herr Mamikins, wir werden Sie.
Well, thank you, Mr. Mamikins. We will refer to this. Perhaps you could explain the background to this issue, and then I'll see how we can get this organized here in this House. Mr. Tremosa, you have the floor, sir.
Vielen Dank, Herr Vorsitzender.
Thank you.
Dear Commissioner Dombrovskis, dear colleagues, we live times of uncertainty where future stability in our economies cannot be taken for granted anymore. In this context, the biggest reassurance we can have for the future is the ECB safe pair of hands. ECB policies have been the correct ones in general terms, and tomorrow I hope this chamber will clearly endorse them, as we did in the Econ Committee some weeks ago. ECB policies are subject to improvement and critique, of course, and in this report you will find several ideas that may be of your interest. We believe, for instance, that the assets purchase programme should be redirected away from public debt buying into investment assets related to the EIB. The ECB should try harder in buying assets, like a new wave of project bonds related to EU projects with clear EU-aided value. For example, assets related to the building of the trans-European network of energy and transport, fundamental for the economic of the Eurozone, but lacking proper investment in some member states. These European projects related to the Energy Union and the Transport Union were voted largely by this Parliament in the last legislature. We need investment, but smart investment. No more airports without planes. No more high-speed trains without passengers. No more roads without trucks and cars. So I believe that the current APP is being used by some member states to avoid necessary reforms in the fields of late payments, energy reform and public deficits. We also ask the ECB to study how would impact the European monetary policy that member states emitted debt directly related to public investment, so the ECB could buy it. This may give incentives to member states to increase their level of investment in research and education. We are also worried of the effects of negative interest rates in our banks and in our economy, if they are maintained in the medium term. We know that the ECB is aware of these downside risks. I hope that negative interest rates will be the first measure to be unwound. We express also our concerns in the report on the creation of housing bubbles in many big cities of Europe, like in Barcelona, where I come from. These cities are more and more expensive due to international capital inflows. Ultra-low interest rates are partly responsible for it, together with, of course, local mistakes. Income inequalities are also worrying on the rise. Finally, we call the ECB to study in depth how small saving banks and big banks react differently during the crisis on the concession of new credit. So we ask, are healthy and well-managed small saving banks a key part of the rapid recoveries in some countries of the Eurozone? And I also ask myself and this chamber, do we need to balance concentration at the big bank level, which is happening in some member states, with a new wave of small banks linked directly to their local territories? Dear Commissioner, dear colleagues, I really look forward to your views on all these issues. Thank you very much.
Thank you very much, Mr. Tramose Barsalas. I will hear from Mr. Draghi the moment he will get here. So I move now to Commissioner Dombrovskis. You have, sir, the floor.
Madam Chair, honourable members. First of all, I would like to thank the rapporteur, Mr. Ramon Tremosa, and all ECON members for their work on this report. The ex post assessment of ECB's activities by the European Parliament is an important part of the democratic accountability of the ECB and a necessary complement to its independence. The ECB's independence in the conduct of its monetary policy, as enshrined in the treaties, is crucial to the objective of safeguarding price stability. The Commission shares the view that the ECB's unconventional monetary policy actions had a positive impact on overall financing conditions in the euro area. The implementation of the ECB's previously announced measures is expected to keep gradually improving financial conditions and contribute to bringing inflation closer to the ECB's objective of keeping inflation rates below but close to 2% in the medium term. However, we also share this Parliament's view that a prolonged period of low or even negative interest rates represents a challenge for the European financial system. While low interest rates are necessary to support the recovery and have had some positive impact in the short term on financing costs and capital gains for banks, a protracted environment of very low or negative interest rates would be a symptom of persistent weak aggregate demand and overall macroeconomic conditions. As emphasised by Mario Draghi a number of times, by monetary policy tools only, we cannot ensure a sustainable recovery. EU member states must use the time provided by accommodative monetary policy wisely and advance necessary structural reforms while continuing with responsible fiscal policy. Moreover, at the level of European Systemic Risk Board, we have undertaken considerable work to assess the financial stability risks that may arise from a prolonged period of low interest rates. We are aware of the risks this poses, both to banks' business models through depressed net interest income and for insurers and pension funds with fixed liabilities. We have policy measures in place to address the most severe risks, and we continue to monitor the evaluation of this issue. Honourable members, I look forward to a fruitful debate. Thank you.
Thank you very much, Commissioner. Now we start the debate with representatives of the political groups, and the first speaker today is Mr. Mann.
Thank you very much indeed, Madam President, Commissioner Dombrovskis, colleagues. The economic and financial problems in the EU cannot be solved only by ECB monetary policy. Now, obviously, we have to stimulate overall growth. And Mario Draghi is correct. We can only do this if we have balanced structural funds and a solid use of budgets in all Eurozone member states. Cyprus, Ireland and Slovenia are good examples of this because they have brought their deficits under the 3% reference value of GDP. That creates positive, sustainable growth in the economy. In 2015, the ECB assessed its asset purchasing problem until about 1.7 billion euros are foreseen for that. And now there are loans from non-financial bodies, both local and regional bodies as well. But excessive expansionary policy brings risks with it as well. Yes, I understand that people have concerns about distortion of competition if loans are purchased on the capital markets from large companies and the SMEs are not adequately involved. Also, the ongoing low interest rate policy is also threatening the situation as well. Obviously, longer-term saving loans in certain member states are below the current rate of inflation. And obviously, the aim is to keep also to get inflation to 2%. This will be in line with the mandate established, yes, and credits to households and companies in the Eurozone has certainly been improved. Investment, which should be achieved there, is not adequate as yet, however, and lies 10% below the level prior to the crisis. Now, these are critical comments. There are some concerns as well expressed by the rapporteur, and there is broad support for that in this report. Ramon, on behalf of the EPP, I would like to thank you for your work and for your openness to compromise, also for the very close cooperation that we as shadow rapporteurs enjoyed with you. And I hope that in all of our differences and diversity tomorrow we will find a broad majority in favour of your report. Thank you.
I have a blue card for Mr. Mann. I suppose he will accept it, so go fast.
Ja, recht herzlichen Dank.
Yes, thank you very much. I'd like to thank Mr. Mann because he said how important SMEs are and also the pursuance of independence. 500 million was earmarked in the 2017 budget for youth employment last week, and I think SMEs may well be able to play an important role here. Mr. Mann, do you see any possibility for the ECB to come up with a strategy as to how we can improve employment among young people, and can we improve the financing possibilities for SMEs so that they can access risk capital from small and medium-sized banks?
Mr. Mann, very short.
Well, I can simply agree with Mr. Rubik. The European Parliament has established many exceptional means to support SMEs, and that's what we need, because indeed it's the SMEs that represent the backbone of our economy in Europe. They provide most jobs. That's why we need this. And obviously, people have to understand in the European Central Bank as well that they can't simply say we will only work with the big companies, the big banks. And our colleague Ramon has already pointed out how important it is to ensure that there is support available for others as well. So we have to work with high pressure. We need results. We can't just use these big words. And I would fully agree with Paul Rubik on this.
Nandes.
Muchas gracias.
Thank you. Thank you, Madam. Well, first and foremost, I would like to thank the rapporteur, Mr. Tremosa, for his work over these last few months, and all of the people that have actually worked on this report. It's a very balanced report. I think it helps us understand the work of the ECB, and also gives us some idea as to where we should be going and what direction monetary policies should be moving. As was already said by the previous speakers, it clearly underscores the different guidelines and policies that have been put forward by the ECB, and basically to meet the inflation rate strategy and policy. We're still very far removed from this, despite of all the expansive measures that have been taken, and we are shining some light on certain aspects, loans to SMEs, for instance, and the way in which SMEs really need to fit within this expansive policy of the ECB. But the report also indicates that monetary policy on its own is not enough. We need to table structural reforms in certain sectors, particularly in the banking sector. The European banks, and particularly in some countries, have more difficulties in this area, and they are still restricting the possibility for loans to reach all companies and all consumers. Apart from this, we need serious fiscal policies. Over the coming days, we will be seeing the annual growth report prepared by the Commission, and the Vice President the Commission, Mr. Dombrovskis, is here, and they need to tell us what fiscal policy we need to start up to go hand in hand with monetary policies. Because if there's such low investment, if investors know nothing about profitability and benefits and profits, because after all the entire environment in Europe is a very uncertain environment, and it is after all the investor who has to shoulder the risks. So we need to promote demand in order to fulfill the objectives of inflation rate, which the ECB needs to take into account. So within the coming semester, we need to define the policies, not just on a country-by-country basis, but also the holistic approach, the macroeconomic aspect, which needs to go hand in hand with monetary policies of the European Central Bank, with a reasonable result within a very complex environment. Over the last few seconds, I'd like to very briefly say that the profits of the European Central Bank, of the only federal institution of our currency, the euro, should go back to the budget of the Union. Now, we can promote this type of debate. This can be done without a serious reform in the treaties. This can be achieved, and we need to talk about this over the coming months. Thank you.
Thank you very much. And now I turn to Mr. Draghi for addressing the plenary. So please, President Draghi.
Mr. Vice President of the European Parliament, Mr. Vice President of the Commission, honourable members of the European Parliament, first and foremost, let me apologise for this delay due to especially troubled transportation, and so many apologies. I'm happy to be back at the European Parliament to discuss with you the ECB annual report for 2015. This debate is an important pillar of our accountability. We take your comments and suggestions very seriously. At your request, last year, we began publishing the ECB's feedback on your resolution on the ECB annual report. On October 2016, the Governing Council also approved principles increasing transparency in developing ECB regulations on the European statistics. These principles take into account the transparency practices of the European Parliament, the Council of the European Union, and the European Commission. In my remarks today, I will retrace the economic developments since our last plenary exchange in February. In particular, I will discuss the role of the ECB's monetary policy in supporting the ongoing recovery. I will also review the policy agenda aimed at addressing current vulnerabilities in the euro area. Let me say now a few words on economic developments and the role of the ECB's monetary policy in supporting the recovery. The euro area recovery continues to proceed at a moderate but steady pace. It has shown remarkable resilience to adverse developments and uncertainties emanating from the global environment. In fact, euro area unemployment has been steadily declining. More than 4 million jobs have been created since 2013, when the situation was at its worst. Domestic demand has also strengthened, and real GDP growth has recorded positive figures for 14 consecutive quarters. Since the beginning of the year, headline inflation has gradually picked up, moving from the negative rate of minus 0.2% in February to plus 0.5% in October. Our monetary policy measures since June 2014 have been a key factor behind these positive developments. Asset purchases, targeted longer-term refinancing operations, TLTROs as they're called, and low policy rates have strongly supported the recovery. Let me explain more in detail. First, the pass-through of our monetary stimulus to bank lending conditions has been remarkable. Interest rates have fallen markedly across a broad spectrum of asset classes and credit markets since June 2014. As a result, euro area firms and households have experienced more favourable borrowing conditions. For example, bank lending rates for companies declined by more than 100 basis points between June 2014 and September 2016. Bank lending conditions for small and medium-sized enterprises, SMEs, the backbone of our economy, have improved even more. Since May 2014, bank lending rates on very small loans to corporations have declined by about 170 basis points. They are now converging towards those loans of large-scale borrowers. Evidence from our bank lending survey supports this picture. Banks report that our measures are contributing to more favourable terms and conditions on loans and are supporting credit creation. Moreover, we see that banks are passing on the very attractive funding conditions of the TLTROs to their customers. Lower borrowing costs for firms and households have stimulated both consumption and investment. For example, household income is benefiting from lower interest rate expenses. Likewise, investment spending benefits from lower financing costs, which are making more investment projects profitable. Supported by our monetary policy, the recovery is sustaining its momentum. We also expect headline inflation to continue rising over the coming months. At the same time, we are not seeing a consistent strengthening of underlying price dynamics. Much of the expected increase will be driven by statistical factors related to the stabilization of oil prices. Moreover, the return of inflation towards our objective still relies on the continuation of the current unprecedented level of monetary support, in spite of the gradual closing of the output gap. It is for this reason that we remain committed to preserving the very substantial degree of monetary accommodation necessary to secure a sustained convergence of inflation towards levels below but close to 2% over the medium term. However, as your draft resolution on our annual report argues, our monetary policy support has to be accompanied by decisive action from other policy areas. In fact, we continue to face a number of structural challenges that are holding back a more dynamic expansion of the euro area economy. So, the right policies need to be designed to address existing vulnerabilities and challenges and ultimately secure higher sustainable growth for the euro area. As I argued before, the euro area economy has proved resilient despite the uncertainty caused, among other things, by the crisis in emerging market economies, the collapse in oil and commodity prices, and the consequences of the UK referendum. Beyond the relevance of the ECB monetary policy, an important contributing factor has been the more robust financial sector, which has emerged from the financial crisis. The decision to address the mistakes of the pre-crisis era through ambitious regulatory reforms is thus paying off. It has resulted in a European financial sector that is now stronger in terms of capital, leverage, funding and risk-taking. For example, common equity Tier 1 ratios in the euro area have improved substantially, rising from less than 7% for significant banking groups in 2008 to more than 14% today. The welcome improvements in bank solvency and the related improvement in asset quality are a tangible result of our common work to create the banking union. The comprehensive assessment we conducted in 2014, together with a deep asset quality review, encouraged banks to strengthen their balance sheets without delay. As a result, while the level of non-performing loans, NPLs, remains high in some countries, today this problem is not primarily related to the robustness of balance sheets. Coverage ratios are close to 50%, and much of the remainder is collateralized. A more resilient euro area banking system has been able to respond to the impetus originated by our monetary policy and facilitate the recovery in credit we have witnessed so far. However, a number of structural factors are still weighing on the ability of the financial sector to fully support the euro area recovery. Notably, the profitability of euro area banks remains a challenge to be addressed. While bank profitability and the level of bank equity prices is not per se a matter for a policymaker, insofar as it raises financing costs for banks, it could ultimately curtail lending to the real economy and hold back the recovery. We should therefore consider what factors are behind this and what we can do to address them. One factor is certainly the low growth and low inflation environment, which translates into low interest rates. By supporting the recovery, our monetary policy measures are supporting a return towards higher rates of return. In other words, low interest rates today are necessary for a return to higher interest rates in the future. But legacy and structural challenges are also important factors behind banks' low profitability. Where profitability is being affected by structural issues such as overcapacity and inefficient cost structures, rationalization and consolidation must form part of the answer. Where the NPLs, non-performing loans, are at a high level, creating the conditions for a faster resolution of bad loans is an essential part of the solution. ECB banking supervision has presented its draft guidance on NPLs for public consultation. We have also conducted a stocktake of national supervisory practices and legal frameworks related to NPLs, with a view to creating liquid markets of distressed debt efforts will be required to foster the development of an NPL servicing industry, to improve data quality and access, and to remove tax and legal impediments to debt restructuring. The European Parliament also has an important role to play in a number of key legislative dossiers. Some related to the banking union, with the proposed European Deposit Insurance Scheme and the introduction of risk reduction measures in the context of the upcoming revision of the legislative pillars of the Single Rule Book for Banks, namely the Bank Recovery and Resolution Directive, the Capital Requirements Regulation, and the Capital Requirements Directive. Others relate to the Capital Markets Union. In particular, the negotiations concerning the securitization regulation need to be finalized soon. Securitization can play a very important role in increasing bank funding to the economy, but regulatory uncertainty is detrimental to European securitization markets. We consider that the Commission has put forward a strong package that balances a revival of the European securitization market with the preservation of a prudent regulatory framework. Progress needs to be made in other areas too, particularly in solvency law and taxation, as announced in the Commission's communication. It will also be necessary to address the financial stability aspects of the Capital Market Union as part of the macroprudential review. A stable, profitable and competitive financial sector is essential for sustainable economic growth. But the reverse is also true. This is why we need more decisive action to raise the potential growth rate of the economy. First, let me echo your draft resolution. The implementation of structural reforms needs to be substantially stepped up. This concerns in particular policy actions to raise productivity and improve the business environment. We will soon discuss the Annual Growth Survey 2017, which touches upon these exact issues. We should make the best use of the annual cycle of economic governance by ensuring that recommendations, including euro area recommendations, are really taken into account and effectively implemented. Second, fiscal policies should also support economic recovery while remaining in compliance with the fiscal rules of the European Union. For instance, a more growth-friendly composition of fiscal policies could boost growth. And this leads me to my final concluding point. During our last plenary exchange in February, I said that the cohesion of Europe was being tested. Since then, the challenges have increased. It is now more than ever important and necessary that Europe responds cohesively and decisively to the challenges it is facing. I believe we should remember the words of a great European, Carlo Azeglio Ciampi, the words that he spoke in this room more than 10 years ago. If we act alone, we will be at the mercy of events bigger than us, events that threaten peace and European security. I am confident that the foundations on which the EU project is built are strong enough to achieve the objectives that have been entrusted to us by the people of Europe. And I'm now looking forward to the debate. Thank you for your attention.
Thank you very much, Mr. Draghi. Now we continue with the speakers. And the next one is Mr. Lucke.
Frau Präsidentin!
President, ladies and gentlemen, let me begin by thanking the rapporteur for his report, and I would like to thank Mr. Draghi for having arrived so he can hear my speech in the European Parliament. I'd also like to thank Mr. Draghi for saying that he is going to listen very seriously to what we all say, because Mr. Draghi, there is a crisis in the Eurozone. It is a serious crisis, and to know how serious it is, you just have to read Mr. Tremosa's report. He indicates the difficulties that exist in the Eurozone, and I think in this debate it's already emerged that economic and fiscal issues are emerging in the Eurozone. In spite of all the measures taken by the European Central Bank, in spite of all these measures, we have distortion on the markets and we have no progress in competitiveness and productivity. We have negative interest rates. I mean, Mr. Draghi, you say that budgets have more money to spend because they're not spending so much on interest rates, but the truth is that this is destroying a culture of saving. This negative interest rate situation is promoting debt, and that's the opposite of what we want. In addition, what about private pensions? In the 1990s, Mr. Draghi, I signed up to a pension fund guaranteed 4% rate. How are they supposed to guarantee this 4% when you have set the interest rates to 0 or even have set them at negative rates? And so we've got this distortion, but at the same time we're seeing mortgage bubbles, property bubbles that Mr. Tremosa mentioned. We're seeing increasing rents in large towns and cities. We're seeing increased inequalities between those who have wealth, assets, the values of their assets are increasing significantly, and those who don't own assets. Mr. Draghi, these are effects that we didn't want to see as the result of central bank policies. And just to conclude, President, on the debate that is going on within the EPP, the European Central Bank is not an economic ministry. The ECB is not an economic ministry and isn't responsible to deal with youth unemployment. The ECB has a mandate, monetary policy, and they have, unfortunately, far overstepped their mandate. Thank you.
Next speaker, Mr. De Masi.
Frau Präsidentin!
President Draghi, Ramon, all is not well in the Eurozone, particularly not for the youth unemployed in Portugal, Greece or Spain, which has just been mentioned. The USA, following the crisis, have carried out an expansive fiscal policy and recapitalized banks under state supervision. Europe has bailed out banks, and it has cut back on public investment, salaries and pensions. For years, the ECB has not been meeting its inflation targets, and cheap money is flowing onto markets rather than going through the real economy, because banks are providing barely any credit as well. The repackaging of non-performing loans through the Capital Market Union is ridiculous. This is nothing to do with SMEs. It's about trying to get toxic assets out of the balance sheet and pass them on like hot potatoes. Financial stability and growth are not a contradiction. It was a financial crisis which has given us this lost decade. The Deutsche Bank continues to be the most dangerous bank in the world. Italian banks face major problems, and insurance also remain systemically risky. That's why we need public investment in order to normalize our interest rate policy. It was a mistake, basically, to force so many people into private insurance. We need tough structural reforms for banks rather than pensioners or employees. And the German mega bank has to be split up. The ECB must support public investment because the German government is continuing to play against the rules of the game with its current account surplus at 8% of GDP. And obviously we have to change the situation and the approach we're taking.
Speaker, Mr. Utasun.
Sí, señor Draghi, bienvenido al Parlamento.
Thank you. Welcome, Mr. Draghi, to the European Parliament. And I'd like to thank the rapporteur for this report, for the work that he has done. It is true that, Mr. Draghi, you've had to face up to a situation of total paralysis on the part of member states and suicidal austerity policies, and it is after all you who's had to somehow throw a safety line out to all these key member states and to keep them afloat. But of course this has not made it possible to achieve the inflation rate which the ECB has as an objective. But I don't know whether the 2% inflation rate should be a figure to be revised by Council. But it's true, Mr. Draghi, that you've found yourself with fiscal inaction, and my group is quite concerned, because after the proposal tabled by the European Commission to have a fiscal policy which is a tiny bit more expansive next year, at least a little more than this year, that the reaction of certain member states has been to say no. Not only the Germans have said this, but even the Spanish Minister of the Economy has said no to this expansive policies. And this is what you've had to face up to. And from that point of view, member states are fully responsible for the situation we find ourselves in. I've understood you to say that in the midterm we should not remove these stimuli, and some governments have said this. My group shares this point of view, but monetary stimuli have also led to some risky situations which are very worrying, and I don't think you can delay facing up to these difficulties. There are many studies that indicate this. We have trouble with the impact of non-conventional measures on inequality, because of course it's the financial assets that benefit from this, the subsidies to major corporations. We've talked about this at the last Economic Affairs Committee. You're buying bonds from large corporations which don't really need your help. It'd be much more interesting if, together with the European Investment Bank, you'd create channels to finance environmental projects, social projects. This is something which is out in the open and is a debate. You've also talked about the real estate bubble. That is a serious risk. And there's a final point I'd like to raise, which we're very worried with, related to the democratic control of the bank. Some of your instruments, you as a board are very discretionary in the putting into place of the rules. So we're faced with some democratic problems. The report is a report of 2015. Let's talk about the emergency liquidity line. Here, in similar situations, you've applied policies which are completely different. In the case of Cyprus, for instance, the bank was insolvent, but you decided, well, the regulator said that the bank was insolvent, but you decided to keep this emergency liquidity line. In the case of Greece, however, the supervisor had not said that the bank was insolvent. You decided to interrupt this. Why? Nobody knows. And this really damages the credibility of the ECB. You need to really clarify your rules on the emergency liquidity line. That is really important. If not, the democratic system of your bank is at stake. Because in the case of Greece, and since this is 2015, we're talking about the decisions you have taken went in parallel with the decisions taken by the Eurogroup, and this, I think, made it the reputation of the bank kind of questionable. So I really think we need to learn the lessons from the past, and the concerns generated by non-conventional monetary policies need to be faced up to and need to be solved. Thank you.
Thank you very much. Mr. Valli.
Thank you, President. Well, like I am every year, I'm a bit disappointed with the report on the European Central Bank, because we've lost a great opportunity to highlight the economic and monetary situation with a bit of intellectual honesty. We have a failure for European citizens here. I mean, it's obvious if you look at jobs, economic development. Things have been stagnating for several years, and basically this is just good for those who are buying member states at discounted prices, and this is a result of the policies that have been implemented in the Eurozone and austerity measures. I mean, you've got cuts to public services, you've got salary cuts, because businesses don't seem to be able to balance changes in other ways. We can't compensate through exchange rates, so now we have to freeze salaries, and basically what we're doing is making people poorer to make the Eurozone more competitive. I mean, this is a project that simply can't work in that way. I mean, it just benefits those who want to speculate, and everything that is a state asset gets privatised. So this is unsustainable and also virtually impossible to reform. This is never going to be an optimal currency area because we don't have the budgets, we don't have the criteria. I mean, if you look at read books by all the greatest economists in the world, look at Joseph Stiglitz, for example, you can see how this is an impossible project. I mean, you can't have a monetary policy for 19 countries, let alone 27 or 28, if you don't have the appropriate conditions in place, because there are different interest rates and inflation rates needed, and the European Central Bank will never be able to resolve that problem. We haven't put that issue in our report, and that's a waste of an opportunity, because basically it's all falling apart. I mean, I think the collapse will take place. It will take place in an uncontrolled manner, and it will be the fault of elected representatives that didn't deal with the issue when they could have done. Thank you.
Monsieur le Président.
President, good afternoon. Criticism on the ECB is always more severe in this Parliament. We should question the legitimacy of your institution, of your monetary institution. Once again, it has been announced that your plan will now be continued until September 2015. You want to buy more and more assets to save some of the financial markets and the private banks in difficulty, but not to relaunch the productive economy in Europe. So basically the economy is faced with monetary policy which is distorted. This is an economic heresy, and certain economists call them incendiary. I think the European Union as such needs to be in a position to have in its own hands its policy. The United Kingdom is doing this, Switzerland is doing this, and European member states need to supervise their banking systems at national level. Basically, we need to come back to national economic governance, whatever the cost may be. And for economic recovery, we need to convince Germany of getting their budgetary margins to play to relaunch the economy. So, Mr. Draghi, remember, if you don't want people to turn Europe upside down, the single currency needs to be turned to a common currency, the ECU, therefore.
Thank you. Next speaker, Mr. Papadakis.
Η ποσοτική χαλάρωση.
Quantitative easing from the European Central Bank is the other side of the anti-populist policy of the EU, using money to support capitalist growth through major companies as well. Now, unemployment means obviously not bringing in elastic, flexible jobs. Obviously, we have to look at the question of the European Central Bank's monetary policy as well. This is not in a popular interest. It's in the interests of the major corporations and people wanting to hold on to their jobs and keep their profits as well. Now, obviously, the Greek government was rushing into closing the second review in order to extend the measurements which were being introduced, and that's brought in further barbarous anti-popular measures. And it's in the interest not of the people but of the capitalists. Once again, the people are clashing with the major capitalist interests, and only in that way, when they stand up against it, will they be able to own the wealth that they produce.
Thank you, Madam President. President Draghi, Commissioner, dear colleagues, I think that this report is very rich in content, unlike some colleagues underlined. And I also think that its main message, at least from my point of view, is that we probably are at a turning point. Timid recovery fails to gather momentum, and it is true that the political events of the past months have not helped to foster confidence and stability. It is true that monetary policy has done a lot to preserve and enhance this fragile growth, but it seems that unconventional monetary policy is reaching its limits, and the ECB has been, in fact, in charge of coping with most part of the post-crisis adjustment. As President Draghi stressed earlier this year, half of the growth we have witnessed is due to the exceptional monetary policy that has been put into place. But this alone cannot solve the problem of imbalances, cannot solve the problem of huge debt overhang. The quantitative easing seems to blur the line between monetary and fiscal policy. It might not be stimulating other adjustments, fiscal and structural, needed to resolve impediments, to put economy on a more robust growth path. We also know that even though this policy benefits have so far outweighed the costs, there are negative side effects to it, which are well outlined in the report. I hope that I can say that whatever it takes being done by the ECB does not make the leaders continue to think, why should we bother? We must continue to emphasize that indeed the last bell is ringing for fiscal policy, for public investment and for private investment to take it over. I also believe that the proposals in the context of the Capital Markets Union look indeed very promising as tools stimulating growth policy. Results of some studies also suggest that monetary policy might no longer be able to be the same in the future, with real interest rates lower than in the decades preceding the crisis. But whatever it will be, monetary policy will remain fundamentally important for the Eurozone in the future, and the ECB will continue to be in the front line. There are still many black swans out there ready to test our cohesion and resilience. Therefore, let me finish by saying very strongly that we must avoid anything that could cause a loss of confidence in the monetary policy of the European Central Bank. Thank you.
Thank you very much. Madame Beres.
Merci, Madame la Présidente.
Thank you, President. President of the Bank, Vice President, well, thank you for being here on the occasion of the annual report on the ECB. It's time to look at the balance of the European policy mix now, and I think that's what's emerging in this debate. President of the Central Bank, you said how the ECB's non-conventional policies enabled you to support the activities of the Union, and as you know, the Parliament, with Mr. Tremosa's report, supports the continuation of this non-conventional activity carried out by your bank so that you can support demand and restore inflation to Europe. But also talking about monetary policy, it seems clear that there are some things that need to be reviewed and perhaps improved. Firstly, this issue of non-performing loans. I mean, I think the time will come when we're going to have to, quite apart from the work done by supervisors, on whether we need we're going to have to wonder whether we need a European level framework for reflection here. Then once again, you mentioned overcapacity, the need for rationalisation, lack of profitability in the banking sector. I think this is something you regularly bring up, and I think we're going to have to look at that, I think, at some point. And finally, you mentioned the issue of the banking union. We'd like to ask you not to lose faith and continue, together with us, to work in favour of what we're doing, and also for the final backstop, the second pillar, because otherwise we all know that the considerable steps that we've taken will be weakened. There is an element in the international context that you didn't mention, so I will do it. That is the issue of the election of Donald Trump in the United States and the impact that that will have in terms of interest rate developments. I think your institution needs to be ready for that. I'm sure you are. But on the European side, we need to have some visibility with regard to how that's going to affect the European economy. As you always say, you need governments to do their jobs as well, And that's why we support one of the proposals that you made in the Five Presidents report, i.e. a Eurozone budget. And there, again, we need you to maintain your conviction and keep working in that direction. Thank you very much.
Thank you. Mr. Lunes.
Dank u wel, mevrouw de voorzitter.
Thank you, Madam. I have great trust in our Catalan colleague Ramon Tremosa. I think I trust his report. I think we're moving in the right direction. I'm not so... I don't really have that much belief in Mr. Draghi's speech. I don't quite see why we need this type of promotional chat. What we need is a right to get an explanation, to understand what the European institutions are doing. And we need this in a clear language, in a language we understand, because not everybody understands the consequences of your policy, Mr. Draghi. Not everybody understands your massive printing of money. People see that their savings are not really giving them anything, but do they know that their pensions are in danger? Do they know that inequalities are increasing instead of decreasing? Do they know that through your policy productivity is affected and purchasing power is affected? That is what we need to do something about. We need to teach people what they can do with their money. They need to know what is happening to their money, because they are paying more money because of your policy. Thank you.
Next speaker, Mr. Papadimoulis.
Thank you very much indeed. Mr. Draghi, Mr. Dombrovskis, the austerity dogma has failed. The Eurozone needs to come back to strong, sustainable growth, and it needs to do that right now, which means more investment. It means we have to stimulate demand, particularly those countries with a major primary surplus, and we're talking about 8%. They're actually not in line with the European treaties with that. Also, we need to push ahead and complete the banking union as well, and we need the deposits guarantee system. The quantitative easing programme needs to be extended also after March 2017, also including finally my country, Greece, within that. Mr. Dombrovskis, Mr. Draghi, the Greek citizens are keeping their promises. They're bringing in major change with huge sacrifice. But we feel that for years, we've been living through the myth of Sisyphus. The time has come for you, the Commission and the European Central Bank, together with the Eurogroup, to keep your promises from on the 5th of December, to have debt relief and also on the question of quantitative easing. Thank you.
Okay, Mr. Coburn.
Madam President, ladies and gentlemen, honourable members, each time Mario Draghi visits this Parliament, I eagerly look forward to it. He tells us how well the Eurozone is functioning and how strong the economic recovery on the European continent is going along. Nothing, ladies and gentlemen, could be further from the truth. The macroeconomic forecasts about growth, productivity and employment rates are painfully low. In 2015, the youth unemployment rate in Greece, Spain and Italy was reaching levels of 40 to 50%. The gap between the countries in the north and the south of the Eurozone is becoming even bigger. Only naive Euro-federalists believe that the euro is good for the citizens and the euro project is creating wealth and economic growth. Mario Draghi and his European Central Bank are ruining this continent. Mr. Draghi, you still believe, with your unconventional monetary policy, that you are stabilising the economy. But in reality, you are creating massive financial bubbles that will burst sooner or later, which will trigger a new financial crisis. As a consequence, the political groups in this House that are still supporting the crazy monetary policy of the ECB are taking a monstrous responsibility. It was the libertarian philosopher Ayn Rand who wrote, "You can ignore reality, but you can never ignore the consequences of ignoring reality." Even the former EU Commissioner Frits Bolkestein, who created the internal market last weekend, said in the Dutch and Flemish press that the euro will die in the next few years, and he is right. We in Great Britain do not want your fairy tale politics any longer. That is the reason why, as GB never wanted to join the euro project, we are now leaving. The GB has had enough of the single market, and that is the reason why we will leave the European Union. The sooner the better, and Scotland will go with us, despite the fantasies of our First Minister. Thank you.
Thank you. Next speaker is Mr. Annemans.
Dank u, voorzitter.
Thank you, Chair. Well, the ECB is the only central bank in the world, in history as a matter of fact, which is a political body which has expanded its mandate until it is now a political body, a political animal, without any democratic control, which I believe is the purpose behind this whole setup. The European Central Bank in the Eurozone, where a central bank tends to be in the hands of a national government, but the central bank really operates in an area where there is no political authority. This seems to be reconstructed by creating a stability pact, by creating a euro semester, by a banking union, by a deposit insurance system, and all of these area activities. One is trying to give the impression that in a Eurozone where there is no political authority, we are being responsible to keep the money that you're pumping into the system, to keep all these funds working, to keep this entire vehicle to function, which at the end of the day is really doomed to fail. This is really the phase we're in at the moment. This has become part and parcel of the political mandate which has been established and which has given itself whatever it takes: quantitative easing, the buying of bonds or of toxic bonds, or the special powers the ECB seems to use without any control. This, it seems to me, is a situation citizens are fearing. Inflation was to be stimulated but has led to deflation. Growth was to be stimulated, and at the end of the day there is no growth, incurring all risks. The explosion of the loan bubble which you have created, and citizens have no faith in this at all, and which is understandable.
Mr. Synadinos.
Madam President, in 2015 the Greek people lost their trust in the European Union, and with the no in our referendum in the summer of 2015 it was clear that it was totally not in agreement with the economic policies of the EU, and it's brought in the closure of companies, poverty and problems for many people. But the credit pressure from the European Central Bank and the inhuman stance of the Commission as well have trampled the dignity of a proud people. The Greeks now immediately need a new model of growth and new policies to be adopted, a new haircut of the debt as well on the basis of its nominal value, and relief from the austerity measures. Speculation among the banks needs to be brought to an end. In other words, what we need right now our nationalist governments, and I'm particularly happy that some of the peoples have stood up and through the Brexit and shown what they believe, and I'm sure that in the very near future they are also going to be followed by France.
Thank you very much. Next speaker is Madam Tomc.
Thank you very much, President. Let me begin by thanking all colleagues, those who have been involved in working on this report which focuses on the ECB rather than the EU's financial policies carried out in the past. Now, the major problem in the Eurozone in 2015 was revitalizing the economy, but this didn't take place to an equal extent in all member states. In some member states it went better, in some it went less well. Many have been suffering as a result of low inflation and low interest rates. This is cause for concern, as we constantly repeat. Certain achievements have been achieved, but they haven't been secured for the future. They need to be combined with other measures, otherwise we won't be successful. I'm very pleased that we have received this report very quickly during 2016. That's a good thing. So what do we need to highlight here? Well, as well as these monetary policy measures, we also need other structural measures. We've focused too much on the banks, and that has left us inattentive to other issues. States are not doing enough. They're not making the necessary structural changes. For example, pensions systems, pension funds are having problems as a result of ECB policies. Let me also mention another point. The ECB could also influence the credibility of microsystems in Europe. I don't think we have done enough here. That's the case in Slovenia and also other member states. We are still suffering the consequences of the bailout of the banking system, and that means that problems remain. There hasn't been particularly business-friendly action, I don't think, and that's why I'm particularly pleased to see that there are principles and guidelines with regard to bad loans. My colleagues and myself in Slovenia are trying to deal with the causes of banking problems, and I hope that we will be supported in what we do. Thank you.
Speaker, Mr. Gualtieri.
Signor Presidente Draghi,
President Draghi, Vice President Dombrovskis, with this report, the European Parliament is expressing its support to the monetary policies of the ECB, recognizing that the measures that have been taken are consistent with its mandate, with the objective of stability of pricing, and by achieving an economic policy for the European Union. It is difficult that in the light the scenario of low growth, low inflation and low interest rates, the measures, the extraordinary measures taken by the ECB in the area of monetary policy have been decisive to preserve the euro area of deflation and to start up the economic activity again. The risks and implications, the negative effects, we need to understand, however, that the ECB monetary policies is not the cause of low interest rates, but is the symptom and necessary therapy which has to be put in place because of slow growth rates, because of the uncertainty, the political and economic uncertainty that exists at the moment. The present expansive policy of monetary policy will be necessary to ensure a return to inflation rate which is close to 2% or below 2%. And simultaneously, it is also important that this is an activity that needs to be undertaken, but not enough. We need to use economic policy instruments that we have at our disposal. We're faced with a vicious circle. Low growth, low investment, which could have a negative impact on potential growth. And then this could become structural, not just cyclical. This is also made more difficult because of the political uncertainty, multilateralism, and the multilateral or approach of the American administration, fiscal policies and economic policies which are focused on growth, focusing on public and private investment and social and territorial cohesion. So the recommendation of the Commission for a fiscal stance, which is moderately expansive, is a step ahead, which is now to be translated into specific tools and instruments. The European Parliament will express its opinion on this. Thank you.
Thank you. Next speaker, Mr. Ojok.
Madam President, ladies and gentlemen, it is a welcome fact that this report has a moderately critical attitude towards the activity report of the ECB, especially as far as the interest rates are concerned. However, this is not enough. I cannot vote in favor of a report that accepts and welcomes the use of a policy of defending the euro at all costs, using such unconventional measures like, for example, an asset purchase activity. So this is actually called printing more money. I think also the appeal to complete the banking union and the capital markets union is really not positive, because they are a threat not only to the countries which are inside the Eurozone. I am astonished that this is not mentioned. Thank you very much.
Thank you very much, Mr. Ojok. Next speaker is Madam Niriada. Then Madam von Storch. Madam von Storch. Yeah, please.
Ja, Frau Präsidentin.
President, Mr. Draghi, we're talking about the ECB annual report, and this all goes back to your August 2012 statement, whatever it takes. There is no other expression that really goes so closely to the heart of the matter. It shows that you're ready to break all the rules. The previous rapporteur, Mr. Kirchhoff, came to the point here and talked about an instability in terms of the rules is worse than financial instability. Mr. Draghi, you have illegally extended the mandate of the ECB. You are carrying out politics. You want to get involved in labour market policies. You want to stop Greece or Italy leaving the Eurozone. You're engaged in politics, but you have no mandate. You have no right to do that. That is not your task. And nothing in life is free. Someone is going to pay for your policies. It may well be savers who don't get interest on their savings. It may well be people who have health insurance. It'll be people with life insurance policies, pensions as well, who need interest rates to get a pension. Nothing in life is free. You won't be paying the price for this. It's the people. And that's why your policies are not only wrong, they're also asocial. Thank you. Stop with those policies.
Thank you, Mr. Pretzel.
Herr Draghi.
Mr. Draghi. Well, there's something I hear coming time and time again from the camaraderie in the EU. That is, the Commission has tabled a very good paper. A paper which shows that macroeconomically we're off the mark. We've seen debt levels increasing in the Euro states. We've got the real estate bubble with all of its social consequences, and all of that in spite of all the measures you've adopted. And probably because of the measures you've taken, Mr. Draghi, illegal state financing, the company financing illegal as well. And Mr. Draghi, sometime I think also are you going to be funding and financing private individuals? That will be illegal as well. So yes, you're involved in policy in all economic and social fields, and that is also illegal. It lies outside your remit, Mr. Draghi. You said that we are probably going to become the pawn of events which are bigger than we are. Well, mathematics are bigger than we are, Mr. Draghi. And debts that you want to build up. They're in the system. They're systemic. You know, we were talking about hyperinflation, deflationary spirals. Well, you're going to have to take a decision, Mr. Draghi. You're pulling the wool over the citizens' eyes, over people who are saving, the savers' eyes, future pensioners as well. And the longer you continue your destructive work, Mr. Draghi, the more dramatic the consequences for the people of Europe. Put an end to it. Put an end to creating this social upset.
Thank you. Next speaker is Mr. Silva Pereira.
Obrigado, Senhora Presidente, Senhor Comissário.
Thank you. Thank you, Madam Chair, Commissioner Dombrovskis, and President Mario Draghi. Well, the first thing I think we need to recognize from today's debate is that monetary policy of the ECB has contributed in a decisive manner and has defended the euro, has created stability in the sovereign debt market, and it has given an opportunity to the European economy and has fought against deflationary trends. And I think we need to say this quite clearly. We all know that there may be collateral damage if this negative interest rate policies remain with us for too long a period of time. But it would also be very imprudent for those who ask to put an end to this type of monetary policies at this very moment, under the present circumstances in which we're faced with turbulence and uncertainty. And in the light of what has happened in the case of Brexit and the election of Donald Trump, we may find ourselves in a period of financial speculation on the sovereign debt markets. So what do we expect the ECB to do? We expect them to issue a message of stability. We want to see clear intervention to stabilize the Eurozone. And I have a question for Mr. Draghi. Is that still the objective of the European Central Bank at this moment in time, at this historic moment in the European economy when the euro is still under threat? This is so important for the entire Eurozone, particularly for those countries subject to speculation, such as Portugal. In the light of the results that have been achieved in the budgetary areas, is it still non-eligible, Portugal, to enter this program for the ABP? More of the same, Mr. Draghi. Obviously, we are coming back to the idea of austerity, which has been pushing Europe to its knees. But you still, we've been talking about another 1.3 trillion euros for quantitative easing. Despite that, unemployment is still sky high, and using the taxpayers' money in Europe to create this real estate bubble. But not only are you not giving anything to Greece through quantitative easing, you're also forcing the Bank of Greece in 2015 to participate in quantitative easing with 17 billion euros. In other words, instead of writing off the debt, you're forcing Greece to lend to its loaners. And that's why we've got this major problem with the non-performing loans. And what about the Troika? I mean, there was a decision taken by the European Court on that. So the Troika, when are we going to stop this clash of interests within the ECB? Because you can't be a member of the Troika at the same time also a lender and a supervisor and apparently an autonomous supervisory body. You can't wear all of these four hats at the same time. An independent ECB does not mean an uncontrolled ECB. Thank you. Mr. Flanagan now. I'd like to give you the floor for 1 minute.
Draghi, you said you were going to listen. You spoke about credibility. You spoke about legacy issues. Your credibility and the credibility of the ECB are intrinsically interlinked. In 2007, Jonathan Sugarman was risk manager of UniCredit Bank in Ireland. That summer, Jonathan officially reported to the regulator in the Irish Central Bank a multi-billion euro liquidity breach amounting to 20 times the permissible deviations. There was no sanction by the central bank and the breaches continued, forcing Sugarman to resign. In February 2010, Irish Finance Minister Brian Lenihan stated that the financial regulator maintains close communications with the regulator of other member states. In 2007, you were the governor of Banca d'Italia, UniCredit the biggest bank on your watch. You spoke about transparency. Answer this. Can you please confirm whether you were informed by the Central Bank of Ireland of these multi-billion euro breaches at UniCredit Dublin? If so, can you explain why the bank has never been sanctioned? And now that you know this, what are you going to do about it? You spoke about cohesion of Europe being tested. You are testing it. Answer this question, otherwise you test it further. Thank you.
Mr. Flanagan, c'è una domanda per lei.
There is a blue card for you, Mr. Flanagan. Will you accept it? There's a question for you, a blue card.
Mr. Coburn, prego.
Very good speech, Mr. Flanagan, as always. I just wanted to know, you and I were concerned before about whether Mr. Draghi had appeared before the Irish Parliament and the committees of the Irish Parliament. Did that ever happen? Could you enlighten us all?
We were told that he was answerable to the European Parliament, but unfortunately any attempts that I make to ask him this question at the Econ Committee, I am refused because apparently I'm not a member. I am a member of this Parliament. I'm asking him now. People are waiting with bated breath. What did you know about this? And we need an answer, and people are watching. We want one.
Onorevole Molnar, prego, un minuto.
Mr. Molnar, 1 minute.
Köszönöm a szót, elnök.
Thank you, Mr. President. Judge Matolcsi is never let close to any central bank in Europe. He only became president of the Hungarian National Bank and he launched unorthodox economics studies using billions of taxpayers and financed overpriced real estate, holiday homes and pieces of art, and they practically steal money out of the pockets of the Hungarian taxpayers, and he is trying to privatize the assets or the resources of the National Bank and thus claiming it's not public funds, or he finances his recent girlfriend from those resources and lives in an apartment which is owned by one of the bank's commercial bank's manager, and he works against the pockets and the taxpayer money. So it is not writing reports, but it would take sanctions and punishment against him.
Thank you very much indeed.
Herr Präsident, Herr Draghi.
President, Mr. Draghi, you say you know the risks associated with your policies. It's in the report, but apparently there's nothing better that can be done. Let me draw your attention to some economic logic. This idea that we need structural reforms in the budgets of national member states. But if you have a 0% interest rate, there's no incentive to implement structural reforms. So your policies are hindering structural reforms. And then a second point, within the currency union, as we've heard, we have false relative prices. The undervaluation of the euro for Germany and the overvaluation of the euro for southern countries. And your policies are not reducing these relative differences. I mean, a multi-billion program, once again, this is being proposed, but the question arises why unemployment is high in Portugal and Greece and why is employment at record levels in Germany. Take note of these things, because otherwise I would say to you is the ECB actually the executioner of the Eurozone?
Thank you very much indeed. Mrs. Kilonen for 1 minute.
Kiitoksia puheenjohtaja.
Thank you, President. This April, the President of the ECB, Mr. Draghi, congratulated in the prologue of the 2015 report its bank for having succeeded rather well in its task of increasing the faith of companies, citizens as well as banks in the future, in a situation where the EU's, Europe's and the global economies are trembling, and Brexit as well as the increasing support for extreme nationalism around Europe is threatening Europe. I feel, Mr. Draghi, that you and I live in different realities, because when I look around me, I see that inequality is increasing. The increasing poverty and extremely important middle class is growing poorer every day. Banks, in this respect, have been discovered to be staggeringly greedy. You talk about the fact how your bank will act as an anchor of citizens' faith in the future. Is this anchor attached to anything?
Viotti, un minuto per lei.
Viotti, 1 minute. Daniele. Thank you very much indeed, President. Well, I think that we have to say thank you to the European Central Bank and to Mr. Draghi for his work, because over these years he's provided financial stability to our continent, to the Eurozone, and he's also protected the zone from the serious financial storms out there. But Mr. Draghi, what I would like to do is to recall policy now, to remind you, the Commission and the Parliament, of two responsibilities that we shoulder as politicians here and policy makers. Firstly, we have to renew our institutions in order to provide democratic control for the Eurozone, democratic control for our budgets and our economies. And my second point is that we have to take the work which has been done in the European Central Bank and make it into policy for growth, for jobs, for investment, for our young companies, for the environment. We need to do that, but we have to continue. We can't continue to offload our own responsibilities onto the European Central Bank. The ECB has to bear responsibility for monetary policy, but we have to have the guts to be responsible for economic and social policy. Thank you. There's a blue card for you. Will you accept it? Your question, please.
Thanks, President. Well, I was interested to hear what was said. And you mentioned that you want the European Central Bank to be involved in monetary policy. But how can a single monetary policy be valid for 19 different countries which have different needs in terms of interest rates and inflation? How can this be effective, politically speaking, but also in technical terms? I mean, it's essentially impossible now, isn't it, at the moment?
Well, from a technical point of view, I'll let the technical experts answer that. From a political point of view, which is of more interest to this Parliament, as I said in my speech, either we are in a position to update our institutions and make the Eurozone democratic as well, or we are not going to be able to face up to these requirements that you mentioned. I would share your view. Thank you very much indeed. Mrs. Tomasic, 1 minute.
Thank you very much. The euro is primarily a political project, one which has made millions of people unhappy and one which has severely undermined the union's reputation in the eyes of its citizens. However, social dissatisfaction is easily dismissed for the sake of clear political goals. A monetary union can hardly work without a fiscal union. A fiscal union is next in the pipeline, and then we will have a European federation. That is the plan. It is therefore not surprising that the euro enjoys so much support among the European elites, and the report commends the promise of the European Bank that it will do whatever is necessary to defend the euro. I myself can hardly commend that promise. The euro binds together a number of very different economies which are bound to face the same problems at the end of every business cycle as they did at the end of last century. For member states in the south of Europe, the euro is a rope around their necks. Northern states, on the other hand, have to use their taxpayers' money to bail them out of the predicament to which they were all pushed as a result of unrealistic ambitions of the European political elite.
Un minuto anche per lei.
You have the floor, Mr. Van Daan.
Euro is een reus.
Thank you. I think the euro is a giant on clay legs. It looks very robust in the north. At the top, Luxembourg, the Netherlands, Germany. But the further you go down, the more clay you find. And you add more clay to this, which is really what is happening. So basically, this entire structure is very fragile, and countries which have debts have received postponement. This is a disastrous decision. Even inflation rate is irresponsibly low, with negative effects for pension funds, for instance. President-elect Trump last month had a better effect on inflation rate, better than the purchasing program QA over the last 20 months of the ECB. The present approach of the present problems really runs the risk of falling apart one day.
Thank you. We now move to Catch the Eye, starting with Mr. Schaffhauser for 1 minute.
Monsieur le Président.
President, I wouldn't like to be in your shoes. I think you're a rational man, and I see that you're obliged to stick to a discourse that you don't believe in. The Eurozone no longer works. There is no comparative advantage. The surpluses of the north are no longer flowing south. There's no point in the whole thing. I mean, how can we emerge from this situation? I mean, you're already acting illegally, let's face it. The only thing that remains to be done, which is something that you can do, but will you do it, would be for you to carry out quantitative easing, which is focused only on southern countries. So monetary creation not only to save the financial system, but that flows to the real economy, to genuinely profitable projects. Then you won't be creating false money, which is what you're doing now. That's an opportunity that you have. If you don't take that opportunity, you will bear the historic responsibility for the crisis that you will have caused.
Thank you. Mrs. Davis for 1 minute as well. Thank you very much indeed, President. The monetary policy implemented so far by the ECB was intended to save the banks and the euro, and generally speaking, it's achieved those goals. But basically, on the other hand, we saw the destruction of the economies in the countries larger to the south, Greece in particular, and its peoples. We've seen the resistance and the salaries of the Greeks being pushed to their knees, and there are very few people who are still in a position to make savings, but they live with the nightmare that that money is going to be stolen by the banks as well, in the framework and in the name of a policy to save the banks. Now, if the European Central Bank is not autonomous to apply monetary policy, but it's rather a servant of the general policies of the which are there to exhaust the peoples of Europe, then it's not going to achieve its ends. It's going to look ridiculous, as will the European Central Bank and its president, Mr. Draghi. Thank you.
Viegas.
Thank you. Mr. Viegas, 1 minute.
Hoje é claro que a União Bancária criada para...
It is quite clear today that the banking union was created for the financial system and to save the banks that are too large to fail. But what is not possible. Well, you impose a series of measures for financial institutions respecting their interests, but basically you're making the problem that you need to solve worse. The situation is a lot worse in Portugal. The supervisory functions are centralized, and the largest Portuguese banks have been sold to foreign banks for nothing at all, and paid by the taxpayer, because at the end of the day this has not really been financed. So at the end of the day this system is no good, it doesn't work. And what about the system of guarantee of deposits, deposit guarantees? It clearly reflects the dominance of the financial elites. They no longer defend citizens or taxpayers, but just the interests of those in power.
Mr. Bogovic, 1 minute.
Hvala poročevalcu za poročilo in tudi kolegom, ki so v svoj...
Thank you very much. I'd also like to thank the rapporteur, and I'd also like to thank previous speakers who said to the ECB that it has carried out a tough task during recent years. I think the situation has stabilized a little bit. The situation has improved in Europe, but major challenges face us. We need to deal with the issue of low interest rates, and I agree with those who say that low interest rates are very dangerous for savers and also for the pensions system. The next challenge will be to balance out the north and the south of the Eurozone. That's the task of European institutions. The Commission and the ECB are calling for reforms, reforms in education and other kinds of reforms, and I wish you all the best and every success in your work. Thank you.
Sì, grazie Presidente.
Thank you very much indeed, President. President Draghi, when he was preparing the extension of quantitative easing beyond March, said that we can't drop our guard because the economy is constantly changing, but the situation is still very fragile, and monetary policy is still a very important key. Now, clearly we need structural reforms, we need better regulation of the banking sector, but we have to take account of the distortive effect of a hard Brexit and the effect of Trump's election, which is leading to volatility on the markets and in Europe as well. The role of the ECB is crucial in all of this, because we have to look at we have to reduce rates to levels we've not seen before. There's been the application of the ABS, and there is also the single assessment mechanism as well. We have to welcome, I think, the efforts expressed by the ECB to do everything it can to defend the euro, and I believe that actually they are doing that as well. That closes the Catch the Eye, and now give the floor to Commissioner Dombrovskis.
Mr. Chair, Mr. President, honourable members. Let me thank you all, but first and foremost the Rapporteur Ramon Tremosa for this debate. The ECB's independence is a precondition for its effectiveness in safeguarding price stability. But so is accountability, especially in difficult economic times, with monetary policy playing an important role in improving the financing to the real economy. To understand and to debate monetary policy is therefore essential for us to shoulder our part of the responsibility, first and foremost, as President Draghi has outlined, regarding the implementation of structural reforms. As such, this debate perfectly sets the tone for the discussions we will have tomorrow on the European semester. The debate has demonstrated that there is much common ground between the Commission's and European Parliament's views, so we count on your continued support in building the foundations for sustainable growth and job creation in Europe. Thank you.
Thank you. President Draghi, you now have the floor.
Let me thank Let me thank Mr. Tremosa Balcells and his colleagues for the report. Let me thank Vice President Dombrovskis. And let me thank all of you for the very relevant, useful debate, and also for the deep concerns that you have expressed on various issues and about the present situation. Let me just present to you a few scattered observations. First of all, this is the first year when the GDP of the euro area has returned to the level before the crisis. It's taken us 7.5 years. So if we look back, things are better today than they were before. I think that's the first statement of fact that we collectively should keep in mind. And all this in spite of the serious geopolitical risks that are maturing and have matured, especially this year. Any available evidence suggests that the transmission of our monetary policy, our accommodative monetary policy, is effective. Has contributed, as I was saying before, to a significant easing in the borrowing conditions for firms and households, not for the large capitalists as such, for everybody. And our policy has stimulated credit creation, and it's basically supporting the euro area recovery. If you look at there are two surveys. One is the bank lending survey, where we ask banks what they do with their credit conditions, and they all say we've expanded credit, we've expanded standards, and our costs have been going down considerably now for a long time. Then we also ask SMEs. Actually, not us, the Commission has a survey for the SMEs, and they ask similar questions. How do you feel today with respect to credit conditions? And the answers are unambiguously positive. The annual rate of growth of loans to firms has increased from -3% to +2% since May 2014. Some of your points, and also in the draft resolution, raise the issue of heterogeneity within the euro area, and also some of the points being raised before. But also that has improved as well. Development in lending rates to non-financial corporations point to a drastic reduction in the fragmentation of bank lending across the euro area, and I can give you all kinds of numbers about that. We have, next to the asset purchase program for the public sector, we have a program, and it was recalled by some of the interventions, where we buy corporate sector bonds. Now, one lingering worry is that this program actually benefits large corporates and doesn't benefit SMEs. Nothing could be far from the truth. The SMEs actually have improved a lot their lending conditions, and it's also one good reason. If the large corporates borrow more on the capital markets, they will free space in the bank's balance sheets for the SMEs. And by the way, also the corporate bond market has experienced a significant increase in issuance. So, funding costs and better access to finance have improved for both small and large companies. And this has and will have a positive effect on investment. Having said that, I understand, of course, from your words, but also we are aware that there are concerns as regards the risks associated with low interest rates and our unconventional measures. Our measures certainly entail some medium-term risks and have side effects. However, do we see a bubble today? Well, if we look at asset valuations, we don't see that their valuations are somewhat high or stretched. Also, any analysis would show that it's not a rise in asset prices per se that can create long-term damage to financial and macroeconomic stability, but it's an asset price boom which is fueled by excess borrowing and leveraging, and this we don't have. In summary, financial stability risks related to our monetary policy measures are for the time being contained, but we certainly watch them closely, and we are certainly aware that they have to be observed and monitored very, very closely. But also we should be aware that the right macroeconomic policy is the best safeguard of financial stability. On the low interest rates, let's be clear. Low interest rates are a consequence of low growth and low inflation all over the world. They are not the creation of the ECB. In this situation, as I was saying, I think in my introductory remarks, the policy rates by the ECB have to be low for stimulating growth, and when you have higher growth and higher inflation, the policy rates of the ECB will also increase. By and large, so far, the negative rate situation, when we weigh benefits and costs, we see that the benefits are.
In ko primerjamo stroške in koristi, vidimo, da so koristi večje, kar zadeva trenutno politiko glede obrestnih mer. Seveda, tu imamo razne akterje, ampak posledice nedavnih ukrepov na dobičkonosnost bank je zaenkrat v nekih omenjenih okvirih. Vemo pa, da temu ne bo vedno tako. Na srednji rok bodo negativne obrestne mere nedvomno imele učinek na dobičkonosnost bank. Kar zadeva gospodarske napovedi, kot sem dejal že prej na našem naslednjem zasedanju v začetku decembra, bomo preučili naše inflacijske napovedi. Naša ocena z meseca decembra bo tudi uporabila nove napovedi, projekcije do leta 2019, prav tako bomo upoštevali delo odborov evrosistema glede možnosti, različnih možnosti, ki omogočajo gladko delovanje našega programa odkupov do marca 2017 in po potrebi še dalje. Zavezani smo ohranjanju takšne drže pri naši politike, ki bo inflacijo obdržala na nizki ravni, vendar blizu 2% na srednji rok. Prav tako smo zavezani ukrepanju, če bo to potrebno, za uporabo vseh inštrumentov, ki nam jih ponuja mandat za doseganje teh ciljev. Seveda morajo tudi druge politike tu igrati pomembno vlogo in o tem sem že večkrat v preteklosti podal svoj komentar. Zato mi dovolite, da zdaj na tej točki omenim le nekatere vidike, na žal dokaj razpršen način pa vendar. Kot prvo, naša monetarna politika je v veliki meri podobna monetarni politiki, ki jo zasleduje v ZDA, v Združenem kraljestvu, na Japonskem. Te monetarne politike se niso tako zelo različne politike velikih centralnih bank dan danes. Kot drugo, trojka ni nobene sodbe, nobenega sodišča, ki bi ECB prepovedovala sodelovati v trojki. V zadnjih letih se je ECB uveljavila z bistveno ožjo vlogo v trojki v skladu z našo staro specifiko, se pravi bančni in monetarni sektor. Nimamo več tako pomembnega velikega glasu, kar zadeva makroekonomske programe, kjer je komisija tista, ki je prevladujoča. Mišljenje, da imajo velike korporacije korist od naših politik, MSP je pa ne, o tem sem že podal svoje komentarje. Glede našega mandata, nekatere izjave so šle v smer nekako, da bodi si izrecno ali neizrecno presegamo naš mandat. No, ampak sodišče meni drugače. Naše politike, češ da ustvarjajo neenakost, no, podatki tega ne kažejo. 4 milijone novih delovnih mest je naredilo več za odpravo neenakosti kot karkoli drugega poprej. Tako da je res, da ko
Turn him off.
Prices go up and the owners of the assets are usually women. So you may have a worsening of distribution in the short term, but then the effect upon employment and upon economic activity reduce the major source of inequality, which is unemployment. And that's what happened in the euro area, where we basically created 4 million jobs. On ELA, I think a point about ELA was raised, and here what the ECB is, by the way, the ELA is a prerogative of the national competent authority, in that case the national central banks of Cyprus and Greece. And the emergency liquidity assistance has to comply with the monetary financing prohibition as laid down in Article 123 of the treaty. So the ELA decisions have not violated any of these principles. They didn't violate the treaty, and they were taken in a fair and uniform way across countries and across time. On Ireland, we had a dedicated hearing on Ireland in Econ, and any MP can ask us any question in writing and we always answer. So if there are questions about Ireland, UniCredit and all this, please do send us the question and we'll answer to it. I think I've answered most of the questions. Some of you raised the point of what would be the consequence of the US elections on our outlook. It's really very, very difficult, of course, to assess what is the impact of this change on our economic policy and on the economic outlook of the euro area. But in general, and we've seen this with the outcome of the UK referendum, we had a reaction by the markets in both cases, which at the beginning was pretty significant, but then it was muted. And markets had shown their resilience, also thanks, especially in the first case, thanks to the preparation of the Bank of England on one side and the European Central Bank on the other. But I don't think we should stop at that. Clearly, these changes have a long-term impact, which is very difficult to assess. And in the case of the UK, of course, it will depend on the shape that the final negotiation will have and the length of time that it will take to find an agreement. Thank you.
Thank you very much, President Draghi. The next speaker for a response will be the rapporteur, Mr. Tremosa Balcells.
Grazie Presidente. Caro Presidente Draghi, benvenuto al Parlamento Europeo.
President Draghi, welcome back to the European Parliament.
The European Parliament will support the ECB policies as the Econ Committee did some weeks ago. We had a very clear vote, a clear majority, 36 votes in favour and only 7 against. And I have to say that it has not been easy, because on the one side there are MEPs that are asking for helicopter money, on the other side there are other MEPs asking or regretting that there are increasing worries about the negative interest rates, about bubbles, about rising inequalities. So I think that tomorrow we can give a clear support to the policies instead of all the concerns that we have heard and that you have very, very good replied in your second answer. I wanted to make a final call to the Green Group, especially to the Green Group. Well, I don't see no MEPs from the Green Group now in this House, but the Green Group has been always pro-European, and in the last years they were all on board with a big majority of this House supporting ECB policies. So I think that in this moment that populism is on the rise everywhere, and also in different countries of this in the Eurozone, the Green Group has been always pro-European, and many of the points and the amendments of the Green Group have been included in the final compromises. And I want to say to the Green MEPs, the narrower the vote will be tomorrow, the weaker we will leave the ECB in front of the rising populism. Thank you very much.
Thank you very much, Mr. Tremosa Balcells. I'd also like to thank everyone who's taken part in today's debate, particularly President Draghi. Thank you for being with us.
The debate is closed and the vote will take place tomorrow. The next item on the agenda is the report by Mr. Ludvigsson on the Green Paper on Retail Financial Services. Mr. Dombrovskis will remain with us, and we will now hear from the rapporteur, Mr. Ludvigsson. Ole, you have the floor. President, I'd like to address big thanks to all of the party groups